The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 3, Nasdaq's up 4, S&Ps are down 2.5. Gold is trading down $1.20 at 11.17. You get silver up 6 cents at 14.95. Both gold and silver, they start moving with conviction. And you can bet today, folks, we are going to have some nice volatility. I suspect up till the 2 o'clock Fed announcement, whether they're going to go up on short-term rates or not, we're going to be battling over the last swing points that were established out here in September and August. That's kind of where we're oscillating around those right now. We'll go over those babies. Once the Fed announces, bottom line is that you can expect a lot of action inside the metal market, inside the bonds, inside the dollar, and of course inside the S&P. Bonds, 10-year right now is up 3 ticks. The 30 is up 11. Bottom line is that those bonds look like they're a monster ABC structure on the way down. So it's really going to be wild because, I suspect the trading odds of how they that traders are actually betting on the rate hike is saying that the rate hike will not be there because it's only 1 out of 4. Basically putting money down on the Fed funds rate. We'll see where that shakes out. King dollar is down 246 ticks. That's at 95.30. What is intriguing out here is that the way that the market is set up. So watch this. Let's go through this for a second. So if I go to the bond market first, we take a look at the bond market. So I'm going to bring up the 10-year first. The 10-year, on the 24th, now here's where the divergence would be. On the 24th of August, the 10-year rocket ship up to 129.10. Now, it had some juice up there. There's volume behind that move. That's when, of course, our markets opened down 1,000 points. That really ended up down 500. But bottom line, NASDAQ futures were down limit. Okay, so when I look at that context, the bonds, to me now, do not want to go back there. They want to go downtown. So I'm starting with there because this is where the divergence is in the marketplace when we look at these 4 separate indices for a second. Okay, so bonds, to me, want to go downtown. King dollar, if we go take a look at King dollar, what you're going to see with King dollar is that King dollar right now is laying out at 95.28. And King dollar looks to me like, guess what? That wants to go down into the 24th. King dollar hasn't been able to hold higher price, got to 96.92, couldn't handle it. Come down its building cause to get into that lower swing point. We go to the gold market. Now, this is where this gets really wild. Okay, so gold came off the lows yesterday. Came off with conviction. Gold also has a high volume swing low that was established out here on the 24th. That high volume swing low, high volume swing high rather. That high volume swing high is 1169.80. Gold, that's where that say it wants to go. We go take a look at the silver market. Same type of setup inside silver. What we have with silver. Silver had really sweet price spread yesterday. Doing the same today. Silver is trading $14.95. Looks like it wants to run to $15.77. Okay, so now let's go to the S&Ps. S&Ps, we take a look. We put the S&P futures up. Bottom line, this is where, there's no doubt you can go either way. The fight here is over this 1981 level. So what you have is this. When we came down from 2095, you went straight down 2095 into 1823. You're back up into this level. If you can't handle the 1981 level, you can basically do a bounce up to 2049 real easy. Just as easy, however, you can go into these swing lows. Okay, I don't have to you know, my take is that we're going to have a failure out here today, but we'll see where this shakes out. I'm just kind of setting up parameters. Now, the larger parameter here is this. The larger parameter, when we take a look at where King Dollar wants to go, where gold wants to go, the S&Ps also have that high volume swing low laying out here at 1823. So the divergence is the bond market. It's going to be really just, and if in fact they do go, can those markets still get through all those swing points? Yeah, they can. And then what would happen there is that the market itself would be saying they're going because inflation is coming into the system and the inflation rate is higher than the actual 25 basis points. 877-927-6648. Let's go take a look at Oracle. This one's really intriguing because Oracle came out with numbers last night. They didn't sell it down at all. When Oracle came out with numbers, it was trading right where it closed. Oracle opened down $2 today. Right now, it's down 73 cents. What you're going to see, though, Oracle's right back into the lows of the 24th, rather. That high is 37.06. We're at 37.54. It's been as low as 36.50. You are going to have an expansion of volume. Thus far, we've done 8 million shares. We reached a high yesterday with 19 million. Oracle looks like it's going to do 8.6s. It's going to do like 40 million shares today, so it's a big number. Some of the Dow stocks, this is what we have happening in the Dow. You got American Express up 19. ExxonMobil's flat. You got Oxy up 57. Big Blue's up 11. You get Big Mac down 45. Hewlett Packard down 32. Walmart is down 38. Inside the NDX 100, the strength versus the weakness out here. The strength today is Dish Networks. That's up 137. Charter Communications up 417. This is all about a company coming in and buying Cablevision. Mondelez is up 81 cents, and Comcast is up 91. Bringing it down, Wynn Resorts down 193, and you know Wynn was the leader yesterday inside the NDX 100. Wynn is really in trouble. Intuit Software, Intuit closed at that's down 225. This come out with numbers that also is trading into the 24th area. You have Green Mountain. Green Mountain was down $1.18, and Seagate Technologies off 88. Inside the Dow Industrial, strength versus the weakness. What we have, the strength inside the Dow is Travelers. That's up 61. Boeing is up 82. You have Microsoft up 24, and Merck is up 30. Taken away from it, on the way down, Verizon's getting hit. That's down 141. You have GE, which was the leader yesterday. That's up down 24. Apple is down 103, and Caterpillar is off 63. If we do take a look at Apple, what you're going to see, Apple can't get out of its way. So bottom line, Apple hasn't been able to make it to its swing point yet of that 117.30. We'll see how that does shake out, but thus far hasn't been able to make it. Inside the futures market, what we have out here, the commodity market, you have lean hogs, they're up 3.5%. You got crude oil up 0.8%. Silver's up 0.3. Natural gas up 0.2. The corn is down 1 and 0.4, 1.4. You got wheat off 1. We have heating oil down 0.2%. Some of the higher volume stocks in this low volume market. You have Marbell's down 48. You got Freeport-McMoRan's flat. United Continental's up 235. Let's go take a look at United Continental. What's that thing doing? UAL. So UAL's up 230. United shifts more out and back flying. Not quite sure why that's up, and it's up pretty good. I mean, it has 700,000 shares. You're going into 800. So United does have some juice behind it, no doubt about it. We have GoPro is up 29 cents. Netflix is down 37 cents. Let's go to Netflix, NFLX. Netflix out here It's not. Netflix is still saying we're going to stay into the 24th. That's what's really going on too, which is pretty wild. The longer that Netflix stays in there, because Netflix, folks, was one of the best performance stocks in the marketplace. Let's go over to the IBB. No doubt, the IBB has kept the Nasdaq higher. IBB right now is up $2.11. Yesterday, it did 1.7 million, and that's pushing with some volume. It was pushing at 2.7. Bottom line is that it's going to need more juice than that, but it is not giving it up on price. Overseas, what we had last night, you had Shanghai give it up again. Shanghai was down 2.1%. The Hang Seng was off 0.5%. Nikkei was up 1.3%. In Europe, what we have, you get a flat market over there. The FTSE right now is down 0.5%. The DAX is up 0.25%. We go to the FTSE, and these rates today are going to be all markets, folks. FTSE pulling back. And we have the same benchmarks, by the way. The benchmarks are, the 28th, 29th, and September 9th out here. FTSE thus far hasn't been able to make that benchmark, actually tested it, gave it up. DAX is laying right at it. The DAX hasn't made it yet. The benchmark on the DAX is 10,382. Yesterday, you made it to 336, but it couldn't close there. Today, we've made it to 273, and right now you're at 255. This is Tom O'Brien. This is TFNN. Dow Industrials are flat. Nasdaq's up 9. S&Ps are down 250. Gold is down $1.70. Silver's up 6 cents. Stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is flat. NASDAQ is up 9. You get the S&Ps off $1.50. And at 10 o'clock, we had the Philadelphia Fed survey come out, the index, rather. So let's go through some of these numbers because it's kind of intriguing looking at how this is shaken out. So the general conditions were 8.3 the prior month, all right? So this is how this works. They had an estimate. It goes from 0 to 10. So they had an estimate of 5.9. The index fell, and it says -6. So that's really intriguing. But let me go through these numbers, and we can try to figure this out. So the prices paid fell by 0.5%. New orders rose. Now, the new orders rose dramatically to 9.4 versus 5.8. So the characteristic was people thought orders would go up 5.8 because, remember, the index is 0 to 10. And they went up 9.4, so that has to be pretty dramatic. The employment, the estimate was 5.3. It went 10.2. So it's like, okay, how did it get to 10.2? I guess the whole index was 0 to 10. But this shipments fell, and you can see that in the Federal Express deal. Federal Express didn't make their numbers yesterday. The estimate was 16.7. They come in at 14.8. The inventories also fell. Now, with the inventories fall, and that's a good thing because that means that things are moving out. They thought the inventories were going to go up 0.2. They went down 2.7. The prices received were just about the exact same. Unfilled orders, that also fell. And then average work week, that also fell. The 6-month outlook actually went up. So we'll see where, when that did come out, the market got a little pop. Bottom line, we'll see. Because what that is still projecting is that there's zero inflation out here. And what the Fed has said is that they are looking for inflation in the marketplace in order to go up. If we go over and we take a look at the oil market out here, yesterday, oil had a bid underneath it. Right now, you're up 24 cents. We're trading at a price point of 47.76. And you have some real juice. Now, price-wise, yesterday we went from 45.20 to 47.73. You did 250,000 contracts. Price-wise today, 24 cents is no big deal. But guess what? This volume is expanding. You're pushing the swing from yesterday with big volume. We've already done 71,000 contracts. That's saying that oil's going to make that run to 50.04. So it's going to be wild watching that shake out because if oil takes out that number and you have volume behind the move, that's an ABC structure up to 55. If we go take a look at ExxonMobil, XOM, because what you did have Exxon and Chevron did move with those markets at that particular point. Now, they needed more volume. We did, on Exxon yesterday, we did 15 million. The 15 is coming into 19 and 20. Today, you don't have the volume. So this is going to be a little tricky here. We're only at 1.7 million. If the volume dies, that would basically set up that, the physical oil market very well may get up to its swing point, but it won't have the volume. It will back down again. ExxonMobil also back down to the lower range of this range we're in right now, and that'd be 71.50. We go to Chevron. We take a look at Chevron. What we have with Chevron, same setup. You know, it tucked its head over yesterday's high. The high of yesterday was 79.21. We got to 79.47 today. Yesterday we did 12.9 million. Right now we're at 1.2. That's going to be, you know, that's not that bad actually. They're kind of acting about the same now. Exxon needs more volume, but if this volume does stay up, and meaning that we get like a good 12.5 million, and you don't really get that much price move, that would still be saying that Chevron and Exxon want to go after that higher swing point. We go take a look at some of the gold stocks out here. We'll take a look at Agnico Eagle, AEM. You know, AEM yesterday, that had some juice underneath it, came off the lows. AEM, we did 3.2 million shares, and right now you're at 636,000. That's a good number. And now AEM hasn't held price. We hit 23.87. We're at 23.40, but you are pushing. You're pushing the high of yesterday with juice. You're pushing the high, last swing high, which is a small swing high at 25.07 with juice. That's what it's going to take in order to bust higher with conviction. This is Tom O'Brien. This is TFNN. Dow Industrials down 14. Nasdaq's up 4. S&Ps are down, where are we? S&Ps are flat. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome, folks. And you know picture if you are running a large fund, folks. Okay, you especially after the downdraft of the August 20th to 24th. Bottom line, you're going to buy insurance. The insurance right now is particularly high in the markets, and the insurance we're talking about is just hedging some part of your position off, basically in the option market, that if the market goes south, you're going to be protected a certain part of your position. And you can only, by the way, protect a certain part of your position because the insurance is always expensive, but now it's really expensive. The cost to hedge a 5% decline in the S&P 500 for the next 30 days is 1.4% of the spot price of the SPY, the SPY. So if we take a look at the SPY right now. Okay, so you take a look at the SPY. The SPY is trading out at $200. So right now you're paying 1.4% of the 200 in order to protect a 5% decline. You know, if you remember, we went down 10%, folks, from the 20th to the 24th. That's double the cost before the last Fed meeting in July, and more than twice the price when the central bank began the stimulus program in December of 2013. The nervousness, of course, is readily seen at the Chicago Board Option Exchange Volatility Index. That is traded above 20 for the last 18 sessions. That's the longest streak since June of 2012. Since 1990, the average is 16.9%. And there's no doubt this has to do, no doubt, with how the S&P went down 10% from the 20th to the 24th. So we'll see where this whole thing shakes out this afternoon. What has happened, even the last couple of days, you know, the VIX started pulling in somewhat. The VIX out here today is really flat. It's 0.37, 21.72. What has happened inside that VIX is it is staying at much higher levels. That's how that thing is shaken out right now. And when you're paying 1.5% for a protection for 5%, that's pretty intense. You know, when that VIX bursted up to this is where this gets really wild. So the 24th, the VIX bursted up to 53.29 and ended up closing out at 40. That's about as insane as you can get. And you can expect as we get closer to 2 o'clock, you'll see that crawling up somewhat. Then after that, that VIX is either going to get crushed. It'll be Of course, if the market goes topside, that VIX will get crushed immediately. You'll see it go from 23 to about 17 or 16 in about a heartbeat. You see us go downtown, you'll see that VIX fly right back up to the 30, 35 level in a heartbeat. When we talk trading volumes for the broker-dealers, one of the first ones that come out that people watch all the time, folks, is Jefferies. Now, Jefferies is it's a huge investment bank, but they do a huge amount of trading. Their revenue fell 50%, and they're the first ones that come out. The rest of the banks are about a month after them. And they lost, this is where they lost money. They lost money in the fixed income trading. Last year, they made $195 million. This year, they lost $18.2 million. Quite a reversal. And that reversal has to do with the volatility that's inside the marketplace. Because you got to remember something. These banks don't trade like you and I trade, okay? We really got to make a trade and, hopefully the trade works out. The way that when you hear trading income off banks, they are the market number one. So what they're doing, they always are basically trying to sell something before they buy it. When that overnight, they have the risk, okay, because they're making the spreads. They're committing to someone saying, okay, I'll buy those bonds. I'm going to sell them to someone else. Well, bottom line, they got stuck, and they got stuck in a very large way. You're talking about big money getting lost very, very quickly. So, and the type of bonds that they were trading in were the high-yield bonds. And most of the banks right now, they're trading in those bonds in a huge way because the spreads much larger. We're not talking treasuries. We're talking high-yield corporate bonds. The spreads are much larger. The banks can make a huge amount of trading revenue and fees. Okay, so what ends up happening, you get both. And of course, because of the way that the energy market has come down, the energy market, has been feeding all of us for a long period of time. I mean, the job growth, no doubt, is absolutely huge. If you look around the country, Texas is getting hit beyond belief right now. If you look around the country, real estate-wise, you'll see that Texas has been one of the most stable. The reason it's been the most stable is that it's all about jobs, it's about money, it's about, how many people are coming into that state or were coming into that state. Now the opposite is happening, okay? The opposite's happening because the oil market is just getting, has got toasted. The scramble is out here in a huge way because what you more than likely read about already, that we are going to see as we're coming up to the November, December, January timeframes, is you're going to see the credit lines getting pulled from these companies, okay? And if you remember, during the debacle of 2007, 2008, it didn't matter how good your credit was personally. The banks pulled all the credit lines. That's the bottom line. I remember that so well, saying, to many of my friends saying, pull everything right down, man, because if you don't pull it down, they're going to take it away. And sure enough, it took them only about 4 to 5 months after that the banks take them all away. Now, of course, I'm sure that everyone's getting 8 million solicitations again because now the whole thing is ramped up again. But bottom line, inside a corporation, that's serious business because if they're only going from whether it's 2 years, 3 years, those credit lines are crucial to keep them in business because the only way companies, the quickest way that companies go out of business, particularly production companies that have high cost, is cash flow. That's the bottom line. And when your cash flow gets cut in half, and that's what the price of oil has cut these companies' cash flow in half. And because when you look at ExxonMobil, when we look at Chevron, they're down about 40%. Well, if we go from last 3 years, they're down 50%. That's a number that is really hard to sustain, meaning to pay bills if you're down 50% if you don't cut everything like ASAP. 877-927-6648. Let's get over and we take a look at the financials because the financials also, may tell us what's going to happen with this rate cut. The thing that's going to be so intriguing is if they don't go up, it's like, okay, what does that mean if they don't go up in rates? Does that mean that things are that bad? So the financials right now today, with 4 million shares, you're coming into 33, 4, 6, 24. That's light volume. Man, we have divergences all over the place. But if we do wrap our head around the aspect that if they go up, I can see the market saying, if they go up, one take is that, okay, the market's going to get crushed because now rates are going to go up. The other side of that, of course, though, is that they go up, markets say, hey, things are good. We're basically, you can go up and it's really good. The opposite side of that is that they don't go up, markets turn around saying, well, they're going to go up at some point. They don't go up, market says things aren't that good. They don't go up, QE stays in place, prices can stay higher. This one here is really a trip. I mean, just all in all. We go take a look at some of the XLE, because the XLE yesterday had a nice day. XLE right now is up 11 cents. Yesterday we did 17 million shares. Yeah, they're pushing the XLE. Okay, we're doing 3.7 million right now. You're at 65.45. The swing point out here is 66.86. It's going to need more volume when it gets to the swing point. But right now, it is pushing highs, and you are pushing highs with volume expanding. You stop pushing, you keep pushing highs with volume expanding like that. That's saying it wants to go. If we go take a look at Occidental, Oxy yesterday had volume of 5.1 million. Right now, you're at 910,000. What do we have? It's an hour and 45 minutes. No, it's an hour and 15 minutes. That's enough to also start building more cars. 67. It's inside the range, inside 67.30, saying you have game on that you can get up to this 73.27 level. As you come over to TFNN, folks, if you happen to like the metal market, want to be in the metal market, this week was my 699th edition of the Gold Report. Next Tuesday is the 700th edition. We're doing a special this week. You can get 20% off the monthly rate for as long as you subscribe. Check it out on the front page of TFNN.com. And we go take a look at silver out here. Silver continues to push with some juice, which is going to be really a trip because, silver, the volatility on silver is just amazing. But silver, got back inside the 1444. That's saying game is on to the 1577. And the real key there is that if you get that number, can you get up into the 1785? If you heard our man, Mr. Larry Pesavento, in fact, I'll bring that up right now. He was talking about the live cattle market out here this morning. And live cattle did reject the 138.87 level. This is going to be intriguing to see how this. I think he was explaining that. I think the buy there was about the 134 to the 136, though. And cattle has been a one-way trip from 156 down to this 139 level. What is cool, though, if you haven't traded cattle is pretty cool to trade. As Larry said, it is liquid, it's electronic, and that's per pound. That's what you're paying out here. Let me just see something. LC1. We bring this back. I see what it's doing. Interesting. Okay, so you're going into the 136, 135. Yeah, it's almost like, the 134 is going to be an interesting spot. The reason 134 is interesting, you had the 133, 134 highs of January of 2013. You also had them laying out there from November of 2013 going over to December of 2013. And then cattle went all the way up to 171. Pretty amazing. Dow right now is down 8. You get the NASDAQ flat. S&Ps are off $3. No big deal. Intra-day out here, you're still running right around the exact same numbers. These numbers, we're going to oscillate around these numbers all day long. The thing that's going to be really, could you imagine that you oscillate around them, they come out, and whether they go up or down, and nothing now happens in the marketplace. Now, that happened 2 Fed meetings ago. If you remember, everyone's waiting for it. I don't think the anticipation was as much as today, but everyone was waiting for it. They come out with it, no action whatsoever. It was status quo. Apple's having a hard time, man. Apple can't get away from that higher swing. It doesn't want to get over that higher swing. Right now, Apple is down $1.20. We're at 115.19. If Apple gets back inside 114.02, that puts game on for 107.34. So Oracle had come up with numbers last night, didn't make their numbers. That thing is down with volume. Verizon also, VZ. Verizon is down 144, 9 million shares. That's big numbers on Verizon, too, by the way. 9 million shares is a big number. I'm trying to figure out whether, let's see. Verizon, the largest wireless communicator, said earnings could plateau at 2015 levels as the company deals with business model changes and sale of some wireline assets. So they come out with a statement. That's what it is. What is intriguing is that Verizon, folks, okay, Cablevision is selling out. And check this out. This is pretty amazing. Cablevision is getting $6,000 per subscriber. So bottom line for the Doyles, and the Doyles, folks, if you don't, they are amazing competitors, okay? These guys, you know, basically huge company, New York City, was private, got it into a public I'm talking over the course of the years. Big numbers. They were going head to head with Verizon. Now there was no growth that was happening, and you had another company come in and buy them at $6,000 a subscriber. That's how much money is still in cable. That's the bottom line. And when you do look at this, if we bring this back, let me see. Yeah, these guys are smart. See, they sold out at the high. So check this out. This is pretty amazing. It's at $32. The high in 2000 was $28. The low in 2002 was $2.90. The high in 2011 was $25. The low in 12 was $11, and they're at $32.87. And their competitor, one of the main reasons I suspect they're out is that they built the company up. They know there's no more growth left, and they're competing against Verizon. You don't want to be competing against Verizon in any market because the Fios business in general is very nice. Dow Industrials, NASDAQ, S&Ps, all flat. Gold's down $1.60. You got silver up 7 cents. Stay right there, folks. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's take a look at the volumes before we get our man, Mr. Basil Chapman, coming on growling a problem with you from 11 to 12. And, of course, we got Daryl Martin, Steve Rhodes, Dave White, and we'll be back here this afternoon. And, of course, we got Andy Hecht coming on right after my show. So thus far, we're at 188 million on the NYSE. We take a look at the NASDAQ. NASDAQ right there is running at 380 million. In both cases, that's light volume. We take a look at the SPYs, the SPY. SPY thus far has done 30 million shares. What we did Tuesday, you did 113 million. Yesterday, we did 99 million. You're going against, oh my God, you're going against 364 million. The Qs, the NDX 100. Now, the volume will pick up at, coming into, 2 o'clock, the volume will pick up. 5 million shares we've done thus far on the Qs. On Tuesday, it did 30 million. Yesterday, we did 31 million. You're coming into 97 million. The IWM, what do we have with the IWM? The small caps. Inside the small caps, we've done 6.8 million. We did Tuesday, you did 26 million. Yesterday, 27. You're going into 79 and 51. So you can see when you look at the, let's do the diamonds. The correlations inside how you're pressing higher are dramatically lighter. So that, to me, puts the probability up that you're going to go south versus north when this announcement comes out, no matter what the announcement is. On the diamonds, Tuesday we did 6.5 million. Yesterday we did 5.5. You're coming into 18.5. So that is one dramatic number. And of course, the bond market is the one market that is screaming that the rates are going, the probability that the rates are going higher are pretty high, are real high, and that is going to happen today. Now, if we take a look at this bond for a second, I want to show you something here because this is where this is going to get really wild. So if the rates do go up, folks, the next question is going to be on everyone's mind, is this going to be one after the other after the other? Now, if the rates do go up, I suspect that the Fed will put inside that statement that it's one, and we're going to take it easy for a while because that's what they've said. The market, however, can take that a whole different way, meaning when the Fed normally turns, the ship turns and they continue going higher. When the ship turns lower, they continue going lower. This bond is setting up, is set up. It hasn't, is setting up, okay? The setup is already there for a monster ABC down. You know, we went down on that 10-year 1.5. That's a monster move, and it looks to me like it's set in space right now that at 2 o'clock, this thing can go south and go south in a big way. And you'll see the first leg, you know, the first leg took us from 127.21 down to 126. 127. Yeah, that's right. 127.21 to 126.20. So you get a full point. That would bring the next leg down to 125.26. And right now we're at 126. So you get another full leg down. And you got to remember, an ABC structure on the way down and the way up is what? Is a straight line move, A to B. B to C is a chop all over the place. If you happen to be watching Tiger TV, you can see the chop that we've had intraday for 2 days. Next move, bottom line, you know, could be a very fast, furious, straight line move on the way down. We go over and we take a look at the, this is what's pretty cool too. You take a look at the gold market and it's just the opposite. The gold market, you had the straight line move up from yesterday. You've been chopping around. Bottom line, we can do that straight line move to higher price. You stay right there, folks. I'm Mr. Basil Chapman's going to be coming up next, growling and prowling with you. And that's right. Buckle up for safety, folks, because 2 p.m. is coming up, baby. Have a great one. Have a safe one. Look forward to speaking here this afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.